Okay, bear with me. We may have a little background noise tonight, but to start with setting up your operating, you go up to list, chart of accounts. I just add a new loan. I think you can see down here at the bottom, hopefully. I go down to account, new. I'm going to make it a loan, continue, and then I just enter operating, okay? If you have a balance on it right now or at the beginning of the year, you can do enter opening balance, enter what the balance is of that date. If you're going to do it at the beginning of the year, say this coming January and then start, you can put it in at that point, or if you want to put it in right now and then going forward, or if you're entering all of your transactions for the year for all of 2021, you'd want to do the balance as of like January 1, so that way you can enter all your transfers and stuff going back and forth as well. So then once I have that created, let's just go ahead and save that. Operating on to save and close. So once I have that created, you either have a balance or you don't, whichever. Now to use it from now on, if you are going to make a transfer, you're going to go up to banking, transfer funds, and then it's just real world like. You'll put the date. It's going to come from the operating fund to the checking account for $5,000, right? Okay. And that's how you're going to record transfers when you put money into your checking account. Okay. Now, if you're putting money from the checking account back onto the operating loan, there's a couple of things. Typically, if you're just putting it all back and you don't know what the interest breakout is, you could just do a transfer the opposite way of what we just did it. Okay. If you know what the interest is, so sometimes when I make that payment, I will get it'll have a split out on the online banking when I transfer the funds back as far as how much is going to principal, how much is going to interest, or you can see it on your operating line statement later, and we could go back and add that detail. If that's the case, or you know how much it is, I would do the write check function. It's going to be coming out of your checking account, right? So I leave the checking account up there. I don't care if you want to enter Banner Bank, okay, or nothing, doesn't matter. But you're going to put $5,000 now back against the operating line. Just a second, go to help him, please. Back against the operating line, so it's $5,000. Then down here, we're going to do operating loan, and this is the principal amount. So I'm going to put $4,500 in there. If I don't know it, I could put the full $5,000 in there just to have it recorded at this point, and then go back and do this next step and break it out on the splits later once you get that info. And then here I'm going to do the interest and fees, okay? So this is the interest portion that the bank charged me. And then that's going to split it out for you. And then so by doing that, if I go to my balance sheet, see if I have it saved over here. I don't. So let's go up here. So we go up to reports, company and financial, balance sheet standard. So then at any point, if I go over here, you can see there's a $5,000 balance because we drew $5,000 off of the operating loan. When I put it back, I put it here, and so you can see here's $4,500 going back against it. That other $500 of interest actually posted to interest expense on the profit and loss. The other thing I believe you questioned me on was the side-by-side. It's paid off over to QuickBooks, still has a couple thousand to pay off on it. So, okay, so you have a loan that has a balance on it, but is actually at zero. I would probably ask my accountant to help me. Number one, if you made any payments this year, some of that might need to be adjusted to interest. If that's the case, I would do a journal entry, and you're going to record some of the balance of that loan out of the principal or the balance on the balance sheet and into interest expense. Anything else you'll probably adjust off your opening balance equity, but that would be a reason that I would go ahead and send them an accountant's copy this year and tell them that the balance on that loan is incorrect and have them adjust it to zero. And like I said, you might, if you've made any payments this year, a portion of that would be interest, and so they would want to move some of that into your interest expense for the year. Hope that helps.